we shall be looking at taxation of specialized business. Please, let's try to mute our audio. Let's mute our audio for those who are still on the road. Please, we are going to look at taxation of specialized business. So under this specialized business, we divide taxation of specialized business into the following category. Number one, taxation of airline, shippings, and telecommunication company is one aspect of taxation of specialized business. Another aspect of taxation of specialized business, that one deals with taxation of banks. That is the second aspect of taxation of specialized business. Another one, which is the third one, taxation of insurance business, means taxation of insurance company in Nigeria. How do we tax insurance company? We have another one called taxation of real estate business in Nigeria, real estate investment company. And we have unit trust business and pension. How do we tax unit trust business and pension? Why do we call this topic specialized business? We call this topic taxation of specialized businesses in a sense that there are some business that their nature of operation is specialized in nature, is peculiar, it's not general. So it has some features that distinguish it from normal manufacturing company or service making company because of the mode of their operation, the nature of their business. So they are specialized in nature. How they carry out their operation is so specialized, it's different from. So why do we call them specialized? Most of these companies that we call specialized business, they operate in different countries. They may be operating in more than 2 countries, more than 3 countries, more than 4 countries. Example, airline, an international airline company, we have office in Nigeria, have office in Ghana, have office in France, have office in so many countries that their operations covered. Likewise to telecommunication company, MTN is not only in Nigeria. We have MTN South Africa, we have MTN Ghana. MTN are in different countries. Shipping companies too. There are so many shipping companies that don't base in Nigeria only. They base in different countries. They will carry cargo from Nigeria to other countries while they move from other country to another. So they are specialized. How do we tax them? So in a nutshell, when we talk about taxation of specialized business, we are looking at some companies in which their operation is specialized, and the way we tax them, we need to follow some particular section of the act. What I mean by that, we need to follow some particular section of Company Income Tax Act, and most especially Finance Act also made some amendments regarding this taxation of specialized business. Hydrocarbon tax too, petroleum company, is a specialized business, which my senior colleague, Mr. Chris, is going to discuss hydrocarbon tax. Is part of his own area of course outline. So, but for me, under the specialized business, I'm going to look at airline, shippings, and telecommunication company. The same procedure. We follow the same procedure in assessing the profit of airline, shippings, and telecommunication company to tax. We also look. I'm also going to look at taxation of bank. How do we tax bank? We are going to look at them. What are the income subjected to tax in bank? What are the income exempted from tax in bank? I'm also going to look at taxation of insurance business. So let's start. Taxation of shippings, airline, and telecommunication companies. How do we tax them? We know shipping, airline, telecommunication company, they carry out the operation in different countries. That means they are not based only in Nigeria. They may be based in more than 3 countries. It depends, even more than that. So in this case, section 14 to 15 of CETA have laid down the guideline that need to be followed while assessing the income of airline, shippings, and telecommunication company to tax. This guideline is specifically stated in the section 14 to 15 of Company Income Tax Act 2004 as amended. So we should have it in mind that under the airline, any income realized derived from passenger, mail, or good loaded outside Nigeria, but they are terminating in Nigeria, they are not subjected to tax in Nigeria. Take, for instance, you are international airline company, you carry passenger from France to Nigeria. The income you realize from that is not subjected to tax in Nigeria because it's not a Nigeria income. It's a France income because the source is coming from France. We have another one too. Any transit that route through Nigeria but route outside Nigeria, loaded on a route outside Nigeria but terminating in Nigeria, they are not subjected to tax in Nigeria. They are exempted from tax in Nigeria. So according to the section 14 of CETA, let's look at step involved in assessing specialized company to tax. What are those steps that we need to follow if we want to assess a company engaged in specialized business, this airline, shippings, and telecommunication company? How do we assess them to tax? What are the steps that we need to follow? In the section 14 of CETA 2, this section talk about how do we recognize capital allowance for airline, shippings, and telecommunication company. We use depreciation as a replacement for capital allowance in case we are not giving capital allowance. So the amount, depreciation amount will be used as capital allowance. Another thing we need to know, as stated in the section 14, before we go to the step involved, is the foreign tax authority where the head office of the airline company or shipping company base must have an agreement with the Nigeria tax authority as per the basis on which the company will be assessed to tax. In that case, if there is no agreement on the basis at which the company is going to be assessed to tax between the foreign tax authority and the Nigeria tax authority, if Nigeria tax authority want to assess the company to tax, the Nigeria tax authority will assess the company to tax based on their turnover. In that case, the reasonable percentage of the turnover is going to be used as an assessable profit, and the company income tax is going to be level on that assessable profit. So let's look at those steps that we need to follow while assessing a specialized company total. What are the steps? First, we need to determine what? The global income. We need to determine global income. What do we mean by global income? Global income simply means the aggregate. Global income is the aggregated income of that particular company in the relevant year of assessment. That particular company can be airline company, telecommunication company, or shipping company. The aggregated income from all the countries that they operate. When you sum all the income, all their income together from all the countries that they carry out operation, that one is called global income. Example, look at my example here. Income from passenger flown from Madrid to Nigeria. Income from passenger flown from Nigeria to Madrid. Income from cargo loaded into aircraft on other routes. Income from cargo from Nigeria to Madrid. When you sum all the income together from all the countries that they operate, it is called global income. After you get your global income, second step is to determine the Nigeria income. Is to determine what? The Nigeria income. The Nigeria income simply means the income in which the source is coming from Nigeria. The income in which the source is coming from where? Nigeria. The income in which the source is coming from Nigeria. That is what? Nigeria income. Where the source of the income is coming from Nigeria, it is called Nigeria income. Example, income for passenger flown from Nigeria to Madrid. You can see that the source is coming from Nigeria. That is Nigeria income. Another one, income from cargo freight from Nigeria to Madrid. The source is still coming from Nigeria. So when you sum the two together, that one is called Nigeria income. Step one is to determine your global income. Step two is to determine the Nigeria income. While step three is to compute the adjusted profit. Compute the adjusted profit is step three. How do we get adjusted profit? Global income less allowable expenses. Global income less allowable expenses. We will get the global adjusted profit. Another way we can get global adjusted profit is by net profit add disallowable expenses. Another way we can get global adjusted profit is by saying the net profit. What I mean by the net profit, I mean the global net profit, add back disallowable expenses. The global net profit, you now add back what? Disallowable expenses. By that, you get your global adjusted profit. Step 4 is to get global adjusted profit ratio. Step 4 is to get global adjusted profit what? Ratio. How do we get global adjusted profit ratio? Global adjusted profit that we get in step 3 all over global income times 100. Global adjusted profit that we get in step 3 all over global income times 100. You get your global adjusted profit ratio. Once you get your global adjusted profit ratio, the next thing for you to do is, once you get your global adjusted profit ratio, the next thing for you to do is to compute depreciation ratio. Depreciation ratio means your capital allowance ratio. Like I said, in the question of specialized business under airline, shipping, and telecommunication company, if you are not giving capital allowance, you are going to use the depreciation in the accounts as your capital allowance. If you are not giving depreciation, you are going to use depreciation in the account as what? Capital allowance. So if you want to get depreciation ratio, depreciation allowance ratio, depreciation amount, which is the depreciation expenses in the account all over global income times 100/1. Step 5 is compute depreciation allowance ratio. How do we get depreciation allowance ratio? Depreciation amount or depreciation expenses all over global income times 100. So you will get your depreciation allowance ratio. Some people call it depreciation relief ratio. Step 6, compute the Nigeria adjusted profit. You need to compute Nigeria adjusted profit. How do we get Nigeria adjusted profit? Your step 4, global adjusted profit ratio, we call it gap ratio, times Nigeria income. Step 4 times step 2, you will get Nigeria adjusted profit. Step 7, compute Nigeria capital allowance. In case we are not giving the capital allowance of Nigeria, we need to compute depreciation allowance ratio first. After that, how do we get Nigeria capital allowance, which is step 7? Step 7, depreciation allowance ratio times Nigeria income. You will get Nigeria capital allowance. Depreciation allowance ratio times Nigeria income. You will get Nigeria capital allowance. Once you get the Nigeria capital allowance, that will take us to step 8. Determine the Nigeria total profit. If you want to get the Nigeria total profit, Nigeria adjusted profit less Nigeria capital allowance. Nigeria adjusted profit less Nigeria capital allowance. You will get the Nigeria total profit. Once you get the Nigeria total profit, you will compute the tax liability, the tax payable, using appropriate tax rates. You compute the tax payable or the tax liability using what? Appropriate tax rates. You compute your company income tax, you compute your tertiary education tax, you compute your police development levy using the appropriate tax rate. So determine the tax payable using the appropriate tax rate. So those are the steps that we need to follow while assessing the profit of a specialized business to tax. Like I said, step one is for you to get the global income. You need to get your global income. Step two, you need to get your Nigeria income, determine the Nigeria income. Step three, compute the global adjusted profit. Step four, compute the global adjusted profit ratio. Step five, compute the depreciation allowance ratio. Step six, you need to compute the Nigeria adjusted profit. Step seven is to get the Nigeria capital allowance, while step eight is for you to get the Nigeria total profit. The last step is to determine the Nigeria tax liability, the tax payable in Nigeria, using the appropriate tax rates. So let's look at a question. Let's look at a question. Let's look at question one. Example question one. Somebody should help us read question one.
Question one. Flying Eagles Limited is a foreign airline company and has been involved in the business of transporting passengers and goods to and from Nigeria since 2010. The financial results of the company's operation for the year ended December 31st, 2023 are as follows. So those are the figures there. Then note the FIRS has obtained note the Federal Inland Revenue Service (FIRS) has obtained satisfactory evidence that the basis adopted by the tax authority of the company in which the company is registered for the computation and assessment of profit or loss of companies engaged in airline businesses is not materially different from that used in Nigeria, and that relevant ratios have been certified by foreign tax authorities. They are required to compute company's adjusted profit ratio, and depreciation ratio. Total
Okay, go
profit
ahead.
of total profit of the company for Nigerian tax purposes, tax liability of the company for the relevant year of assessment. How would the company be assessed to Nigerian tax if the FIRS is not satisfied that the tax authority of the airline company's home country computes and assesses to tax the profit of an airline company?
Okay, thank you very
uh,
much.
on a basis
So,
not very different from prescribed in system. I'm done, sir.
okay. Now, first requirement is we are required to compute what? Company adjusted profit. That company adjusted profit means they ask us to get the global adjusted profit. And like I said in the step, I said if I want to get global adjusted profit, what did I need? The global income less what? Less allowable expenses, or net profit add back disallowable expenses, I will get my global adjusted profit. If I want to follow the step, if I don't want to follow the examiner is asking us one by one question. Assuming I want to solve this question, if the examiner asks us to compute tax liability, I will follow the step one by one. First, I will need to get my global income. In this question, what is my global income? What is my global income? My global income, like I said, is the income from all the countries, the sum of the income, the aggregate of the income from all the countries that they operate. What is my global income?
It's 120,000. Sorry, it's 120 million.
120 million. Yes, you are right. So, working number one, I will get my global income. As part of the working, let me get my global income. Workings number one. You can see my global income. Income from cargo, freight out of Nigeria. Income from cargo freight into Nigeria. Income from passenger freight. Income from passenger freight into Nigeria. 120 million. I'll add them together. Step two is for me to get Nigeria income. What is Nigeria income? Income that the source is coming from Nigeria. So from this income stated above, which one do you think is Nigeria income?
$35 million, sir.
Look at it very well.
Income
Any
from
other
cargo
opinion?
freight out of Nigeria. Income from
That means
cargo
the source is
freight.
coming from Nigeria, Abi?
Yes, sir.
Any other contrary opinion again?
Sir, this income from passenger freight is not stating if it's from Nigeria or otherwise.
Yes, as a good student, examiner deliberately put it like that. But for you to use your IQ, what do you think? This company has two types of income. This company has how many types of income? Two. One is coming from cargo, Abi.
Yes.
Another one is coming
Cargo
from what?
and freight. And
Another one is coming from passenger, Abi.
passenger.
The first one coming from cargo, we see the one that is out of Nigeria, Abi. We see the one that is into Nigeria. Examiner deliberately put income from passenger flight. Second leg, they now say income from passenger flight out of into Nigeria. That means this one I highlighted will be what?
Is Nigeria
This
income.
one,
Out of Nigeria.
it will be out of Nigeria. So it's part of Nigeria income, my brother. It's part of Nigeria income. So if you want to get your Nigeria income, 45 plus 20. Your Nigeria income.
5.
Income from passenger flight out of Nigeria. Income from cargo flight out of Nigeria. This income from passenger flight, since we know the one into Nigeria, that means this one will be out of Nigeria. So that means your Nigeria income is 65 million. Step 3 is to get your global adjusted profit, which is question A. How do I get global adjusted profit? I said, if I want to get global adjusted profit, global income less what? Allowable expenses. I have known my global income as 120. Let's go and look at those expenses in the question. Which one do you think is allowable? First expenses given to us is what?
Wages and salary.
Allow or disallow?
Allowed.
It is allowable, sir.
is allowed. Wages and salary is allowed.
Is
Abi,
allowed. Yes, yes.
what about depreciation? Allow or disallow?
Yes, according to this
No,
this
no,
thing,
no,
sir,
no. Don't say
it's
that.
allowed.
Don't say that. Don't say that.
It's
Depreciation is
allowed.
disallowed. Why we are computing capital allowance,
It's
we can
allowed.
use depreciation is disallowed. Other expenses, allow. Are we going to allow it or disallow it? We may allow it, we may disallow it. We have additional information that give us the breakdown of other expenses. They say other expenses include number one, income tax provision. Is income tax provision allowable expenses?
No.
No, it's disallowed. You cannot make provision for tax. Even if you pay tax, you cannot treat it as an expenses. General provision for bad debt, is it allowed or disallowed?
Allowed.
It is not allowed, sir. Only
Is
specific
allowed.
General
is
provision
allowed.
for bad debt
Only
is
specific
not
is
allowed.
allowed.
Okay.
Specific provision is allowed. Why general is not allowed? Which other one? Donation to University of Abuja.
It is allowed.
Why? Why is it allowed?
It's part of the allowed.
It has to do with education.
Yes, education
No,
and
no, no, no. Yeah. See, if you donate to private school, let me tell you something. If you donate to private school, private university, is it going to be allowed?
No, sir.
It's not.
No,
If
sir.
you donate, the only donation that is allowed, donation to public institution, public university, public polytechnic, public college of education, teaching hospital,
Yes.
general hospitals, anything owned by government. If you donate to them, it's allowed. But if you went ahead and donate to Babcock Teaching Hospital, is it allowed?
No.
No, it's not allowed because it's private. So donation to University of Abuja is allowed. University of Abuja is a government school. Donation to political party, is it allowed or disallowed?
Is not allowed.
Disallowed.
APC. APC is a government agency now. If you donate to them, it's
Not
supposed to be
allowed.
allowed. Have you know so? Eh? Why APC, the ruling party?
Is not allowed. It's not an allowable expenses, sir.
It's not allowed. Political party is a social. It's not a government something. So it's not allowed. So out of these expenses now, wages and salary is only allowable expenses and donation to University of Abuja. So if you go to my calculation now, global income, 120, less allowable expenses. What are the allowable expenses? Wages and salary, donation to University of Abuja. Those are the two allowable expenses. If you sum the two together, it gives you 36 million. 36 million minus 120. So that will give you adjusted profit of 84 million. That is your global adjusted profit. Another way you can get global adjusted profit, like I said net profit add back what?
Add back
Add
the
back
salary.
disallowable expenses.
So in this question, what is my net profit? My net profit is 62 million, Abi?
No. Is 120.
Net profit.
Okay, yes, sir. Yes, sir. You are right.
Million.
62 million. Yes, 62 million. Yes.
If I want to add back disallowable expenses, what are the disallowable expenses? First one, depreciation. Second one, under the other expenses, provision for income tax provision, disallowed. General provision for bad debt, disallow. Donation
Disallowed.
to political. Eh?
Party disallowed. Disallowed.
Donation to political party, disallow, and other
Disallowed.
disallowable
Yes.
expenses.
Other disallowed
So
expenses.
look at the second one now. My net profit is 62. My net profit is what? 62. I will add back all the disallowable expenses. Depreciation, income tax provision, general provision for bad debt, donation to political party, and other disallowable expenses. They are all disallowable. If we add all those disallowable expenses together, it will give you 22 million plus 62 million. It will give you what? 84 million. That is your global adjusted profit. The next question even if you don't follow the step, the next question said, compute global adjusted profit ratio and depreciation ratio. How do we get global adjusted profit ratio and depreciation ratio? How do we get that? If I want to get global adjusted profit ratio, global adjusted profit all over global what? Global income. Million is the global adjusted profit over global income, 120 million times 100, that will give you 70%. The next one, depreciation ratio, depreciation allowance ratio, depreciation amount. The depreciation amount in the question is 6 million all over what?
Global income.
You will get 5%. You will get 5%. So that is question B. Question C said, I should get total profit of the company for Nigeria tax purpose. This question C said, I should get total profit for Nigeria tax purpose. If I want to get my total profit, I need to go back to the step one by one. First step is for me to determine the global income. Second step, Nigeria income, I've done that. Third step, global adjusted profit, I've done that. Fourth step, global adjusted profit ratio, I've done that. Why the fifth step is for me to get Nigeria adjusted profit. How do I get my Nigeria adjusted profit? The global adjusted profit over global income. If I want to get Nigeria adjusted profit, the global adjusted profit ratio, that global adjusted profit ratio times global times Nigeria income, sorry. If I want to get Nigeria adjusted profit, the global adjusted profit ratio times Nigeria income. And I know in my question B, I've gotten my global adjusted profit ratio, which is 70%. 70% times how much is my Nigeria income? 65 million. 70% times 65 million. That will give us how many percent? That will give us how much? 45,500,000. Before I can get my Nigeria total profit, I will also get Nigeria capital allowance. How can I get Nigeria capital allowance? Nigeria income times depreciation ratio, depreciation allowance ratio. Nigeria income times depreciation allowance ratio. In that case, my Nigeria income is 65 million. Depreciation allowance ratio which is 5%. That one will give us, that means Nigeria capital allowance will be 3,250,000. $3,250,000. So go back to question C and D. Question C and D said I should compute my total profit of the company for Nigeria tax purpose. And question D said I should compute the tax liability. So if I want to get total profit for Nigeria tax purpose, I will set Nigeria adjusted profit, computation of tax liability. I want to get the total profit first. Nigeria adjusted profit less Nigeria capital allowance. Nigeria adjusted profit less Nigeria capital what? Allowance. I will get the total profit. In this case, the Nigeria adjusted profit is 45,500,000. My Nigeria capital allowance is 3,250,000. That means my total profit is going to be 42,250,000. 42,250,000. That is my Nigeria total profit. From this Nigeria total profit, I can compute my tax liability, which is question E. Question D. I want to compute the tax liability. How do I compute the tax liability? My CIT, company income tax, I use 20%. Why did I use 20%? Who can tell me the reason why I use 20% for my CIT?
It is because the company's total profit is above 25 million and it is
Is
below
it the
100
total
million.
profit or turnover?
Sorry, the turnover.
How much is this company turnover? This question, how much is the turnover?
In Nigeria, it is 65.
Thank you very much. The Nigeria income is 65 million. Don't base the turnover based on the global income. No. Because if you look at the global income, it's 120 million. It's more than 100 million. We are not basing the turnover based on the global income. We are basing the turnover based on Nigeria income. And Nigeria income in this question is 65 million. You can see Nigeria income. This is Nigeria income. It is 65 million. That means the turnover is between above 25 million to 100 million, which I can still use 20%. TET, I use 3% because the year of assessment in this question, what is the year of assessment? 2024 year of assessment. We have started using 3%. As from 2024, we started using 3%. So TET is based on adjusted profit. 3% of 45,500,000. You will get TET of 1,365,000. Police development levy. That one is 0.005% of adjusted profit. 0.005% of 45,500,000. It will give you a token of 2,275. By the time you add CIT, TET, PDL together, that means the total tax that the company will pay, the total tax liability of the company is what? 9,817,275. Do we understand? Is it clear enough? Let's look at one more question. Let's look at one more question. Let's go to this question, assignment question 2. Somebody should help us read it. Assignment question 2, model telecommunication.
Modi Telecommunications Limited is a Nigerian company based in Bologna, Italy, with a representative office in Nigeria. Its main business is in the area of private communication, which is carried out all over the world. The following data were obtained for the 75 million minutes recorded worldwide during the year ended 31st December 2023. Italy to the rest of Europe, 29.9 million minutes. Italy to Americas, 15.750 million minutes. Italy to the rest of Africa, 6,750,000 minutes. Italy to Nigeria, 10,600,000 minutes. Nigeria to Italy, 8,800,000 minutes. Then Nigeria to the rest of the world, 3.2 million minutes. The following additional information were provided.
Okay.
We can see the figures.
Can you see it?
Yes, sir. Salaries and personal costs, licenses and other operational costs, repairs and maintenance, depreciation of fixed costs, of fixed assets, general provision for doubtful debt at 2% of turnover, income tax provision. Calls are made at the rate of 5 lira for every 3 minutes. It was agreed that the rate of exchange shall be 4 naira for every lira. Required, compute the income tax payable on Nigeria operations for the relevant tax year. How would your computation be affected if you are informed that the Nigerian income should be taken as 22.5% of turnover and capital allowance is 35% of depreciation charged in the account?
Thank you. Thank you very much. So first, by solving this question, we don't need to bother ourselves. It's for us to follow the step of computation of taxation of airline, shippings, and telecommunication company. We need to follow the step one by one. What are the steps that we need to follow? What are the steps that we need to follow one by one? First step is for us to get the global income From this question, who can tell me the global income?
So when reporting or when calculating the global income, are we going to report it in the lira or in naira?
Okay, where are we? Which company is this company? Which tax this company, which country this company want to pay tax?
Nigeria.
So you are not asking. We are going to report it in naira, my brother. We are going to report it in naira. That means let's take the income one by one. We can get the global income direct. Because if we add all this number of minutes, if we add all of them together, it will give you how much? All these minutes, 29,900,000 minutes, this one, 15,000 something. If we add all the minutes together, how much is it giving you?
75 million.
75 million minutes. That means the global minutes that the company render is 75 million minutes. How do we convert the minute to naira? We are being told that calls are made at the rate of 5 lira for every 3 minutes. First of all, we need to convert the minute to a lira. That 75 minutes, if we want to convert it to a lira, how much do we get? It's for us to say 75 minutes divided by 3, Abi?
75 million minutes divided by 3 minutes
Times
times
5.
5.
We get the lira amount. For us to get the naira amount, we need to times it by what again?
We times it by 4.
We times it by 4. We get the naira amount. So let's go to the question. Let's go and look at the global income. Look at my own. Look at how I solve my global income. I write them one by one. I said Italy to the rest of Europe, 29,900,000 minutes. 5/3 times 4. This is the amount I get. 199,333,333. Italy to America, I did the same thing. Italy to the rest of Africa, Italy to Nigeria, so I did the same. At the end of the day, my global income is giving me 500 million. Can somebody try that 75 million divided by 3 times 5 times 4? What is it going to give us?
It's
500 million.
It's still 500 million. You can see that it's still the same thing. Do we understand?
Yes, sir.
After we get our global income, from this global income, we can get step 2. Step 2 is Nigeria income. How do I get Nigeria income? From this global income, which one is Nigeria income among them? Which one is Nigeria income from this global income?
Nigeria to
8,800 minutes.
Nigeria to
Sorry, 8,800 minutes plus 3,200 minutes.
A month. Nigeria income. Nigeria to Italy. Abi?
12 million minutes. 12 million minutes, sir.
Nigeria to Italy, 58,666,667. The other one,
Nigeria to the rest of the world.
Nigeria to the rest of the world. At the end of the day, the total on Nigeria income is how much?
80 million.
80 million. Step 3 is to get global adjusted profit. Global adjusted profit. I said if I want to get global adjusted profit, global income minus allowable expenses. I know my global income is 500,000. Abi?
Yeah.
Let's go to the expenses given to us. Which one do you think is allowed for tax purpose? Which one can we allow for tax purpose? Number one of the expenses is salary and personnel
Salary and
costs.
personnel cost.
Is it allowable?
It's allowable.
It is allowable. License and other operational costs. Is it allowable?
It's allowable.
Yes, allowable.
Repair and maintenance. Is it allowable?
It's allowable.
Yes.
It's allowable.
Depreciation of fixed assets. Is it allowable?
Disallowed.
No.
General provision for bad debt. Is it allowable?
Disallowed.
No.
Disallowed.
Income tax provision. Is it allowable?
Disallowed.
No.
Disallowed.
Salaries and personnel costs, license and other operational costs, repair and maintenance, those are the allowable
Maintenance.
expenses.
Yes.
We minus them. We minus disallowable expenses. We are still going to the working note. We are doing the step. So when we add all the allowable expenses, we global income less allowable expenses, personnel costs allowable, license and other operational costs allowable, repair and maintenance allowable. When we add them, we are going to get 236 million 250,000. So if we minus that from 500,000, that means my global adjusted profit will be what?
263
million 750,000.
750,000.
We have done that. We need to go to step 4. Step 4.
Global adjusted ratio.
Global adjusted profit ratio. This my global adjusted profit I get now, all over what?
Global income.
Which is 500,000. 263 million over 500 million. Sorry.
Almost 100.
That will give us
52.75%.
The next step is for me to get Nigeria adjusted profit. How do I get Nigeria adjusted profit? Nigeria income times
multiplied by global
adjusted profit ratio. That means my Nigeria adjusted profit is 42,200,000. In the main solution says you should compute the tax liability. So in the main solution, the first thing you need to write in the main solution is Nigeria adjusted profit. Because the solution said compute the income tax payable. If you want to get income tax payable, you have to start with Nigeria adjusted profit. You can see in this main solution, the name of the company, Modi Telecommunication, computation of tax liability, that is income tax payable. For which year of assessment? For 2024 year of assessment. Because the year end is 2023. That means the year of assessment will be 2024, preceding year basis. Abi?
Yes.
So Nigeria adjusted profit is the first thing you need to write. 42,200,000. Go back to the working notes. After you get Nigeria adjusted profit, you will now get depreciation allowance ratio. How do I get depreciation allowance ratio? The depreciation in the question, 134 million over global income, 500,000. That will give us 26.80%. That is 26.
Excuse me, sir. In this Nigeria adjusted profit, are we not multiplying this the ratio by 80 million?
We are multiplying it by 80 million now.
Okay, the solution says 26,703,000.
Oh, let me correct it. Thank you for is 80 million. Those are the things I need to correct. If you multiply it, the answer is still remain the same. Abi?
Yes.
Okay. Thank you.
You're welcome, sir.
Now, how do I get Nigeria capital allowance?
Sir,
How can I
sorry, I
get?
wanted to ask a question pertaining to the depreciation allowance. So since depreciation is not allowed, why are we now calculating the
I said
depreciation?
in the
Capital
question,
allowance is allowed.
I said if the examiner did not give you capital allowance, you are going to
You
use
should use
depreciation to replace capital allowance.
Okay, but shouldn't that now affect general adjusted profit?
It will not affect adjusted profits.
Okay.
This depreciation allowance ratio, what do we use it to get? We want to use it to get what? Nigeria
No.
capital
Nigeria
allowance.
capital allowance.
So this depreciation allowance ratio, 26.80 times. Now, I want to get the Nigeria capital allowance. Depreciation allowance ratio times Nigeria income. Abi? Times Nigeria income. Depreciation allowance ratio times Nigeria what?
Income.
Nigeria income. Do we understand? That is 27. You know, if you approximate that 26.80%, 27 times the Nigeria income, 80 million, it will give you 21,440,000. Once you get Nigeria capital allowance, you will go back to the solution of the question, which is question A. I've gotten Nigeria adjusted profit 42,200,000, and I've got Nigeria capital allowance too, 21,440,000. My total profit, Nigeria adjusted profit less Nigeria capital allowance, that is my total profit. That will give me a total profit of 20,760,000. 20,760,000. That is my total profit. That is the Nigeria total profit. From this total profit now, I cannot compute tax liability. What are the tax liability I need to compute?
So, I'm sorry,
CIT.
sir, I'm a bit confused.
What is the conversion?
Sir, I don't know. The capital allowance, the question is 35%.
Let me stop it.
That is question B. We are still solving question A.
If we don't, okay.
Do you understand?
Right.
We are still solving what?
Okay. Maybe
Question
since we don't
A.
have, no problem.
Do you understand?
Yes, sir. But 27% of 80 million is not 2144.
Please don't use 27% direct. I will advise let me correct it. Let me correct it now. It's not 27%. It is
Okay. 26.8.
26.80. Eh? You know, I use Excel to do this calculation. It's the one that approximates it. Use 22.80 direct.
You're giving me the correct answer now.
Okay.
Sorry for the drawback.
No problem, no problem. So in that case, our CIT, what rate are we going to use for CIT? Since Nigeria income is 80 million, we are still going to use 20%.
No.
20%.
Oh, sorry, 20%. You're right.
Nigeria income is still 80 million. We are going to use 20%. 20% of total profit. 20% of 20,760,000. That will give us 4,152,000. For education tax, this education tax, what percentage? 3% of adjusted profit. 3% of 42,200,000. That will give us 1,266,000. In that case, police development levy 0.005% of 42,200,000. That will give us 2,110,000. You know, this company, the name of this company is what? Modi Telecommunication. Abi? Telecommunication company, bank, insurance, pension, they pay another type of tax apart from paying company income tax, education tax, and police. They pay another type of tax telecommunication company pay? NICDA. In our introduction to tax, I explained NICDA to you now. I said it's paid by some company, telecommunication company, internet service provider, bank, insurance. What is the rate of NICDA? 1% of your profit. 1% of your profit. Now, and I said in our first class in this diet, when I'm doing introduction to that, I said all these companies I mentioned that they need to pay NICDA. There are some conditions that will not make them to pay NICDA in a particular year. What is the condition that will not make a company that's supposed to pay NICDA? What is the condition that will make them not to pay NICDA? That they will be exempted from NICDA? I said if their turnover is less than how much?
Is it 100 million?
100 million. In this question A, telecommunication is supposed to pay NICDA. But if you look at my computation, I did not compute NICDA for this Modi telecommunication in A part of the question. Why?
Because their turnover is not up to 100.
The turnover, the Nigeria income is less than 100 million. So this is A part of the question. Now, B part of the question. What is B part of the question? The B part said, how will your computation be affected if you are informed that Nigeria income should be taken as what? 22.5% of the turnover. And capital allowance should be 35% of depreciation charge in the account. What the examiner wants to do in this B part of the question is for us to recompute the tax liability. Is for us to recompute what? The tax liability. Assuming Nigeria income is 22.5% of turnover, which turnover they are referring to?
500 million.
500 million. They are referring to 500 million. If we assume that Nigeria income is 22.5% of 500 million, oh yeah, 22.5% of 500 million, that will give us 112,500,000. And we know if Nigeria income change, we are in B part of the question now. Nigeria adjusted profit will change. Nigeria adjusted profit will change. This Nigeria adjusted profit is going to change. How do we get Nigeria adjusted profit? Nigeria income
multiplied by, I think, global adjusted ratio, something like that.
global adjusted profit ratio. Nigeria income times global adjusted profit ratio. So since our Nigeria income have changed to how much? How much is our Nigeria income now? 112 million.
112 million.
That means my Nigeria adjusted profit too will change. My Nigeria adjusted profit will now be Nigeria income 112,500,000 times the global adjusted profit, which remain the same, 52.75. In that case, my Nigeria adjusted profit is now 59,343,750. That is the B part of this question. My Nigeria adjusted profit have changed in B part of this question. See on B part of the question, what is my Nigeria capital allowance? My Nigeria capital allowance. What does the examiner say we should do if we want to get the Nigeria capital allowance in B part of this question?
They said Nigeria capital allowance is 35% of depreciation.
So
charged in the account.
35% of depreciation. How much is the depreciation? The depreciation is 135 million. 35% of 134 million, sorry. 35% of 134 million. If I want to get the depreciation now for the B
46
part.
46,900,000.
So look at it. The B part, if I want to get the Nigeria capital allowance, 35% of 134 million. That will give us 46,900,000. In that case, the total profit is going to be what? The Nigeria adjusted profit less Nigeria capital allowance. So the total profit is going to be 12,443,750. That is the total profit. I cannot compute the tax liability. That is B part. This tax liability now, CIT. What rate am I going to use for CIT?
30%.
Why?
Because the Nigerian turnover is now 112 million.
Because the Nigeria turnover is now 112 million. So 30% of total profit, 30% of 12,443,750. 3,733,125. Education tax, 3% of adjusted profit, 3% of 59,343,750. That is 1,780,312. Police development levy, 0.005% of 59,343,750. That will give us 2,967,000.19. NIGDA, 1% of adjusted profit, 1% of 59,343,750. That will give us 593,438. Why did I compute NIGDA in B parts?
Because the turnover is still above 100,000. I mean, 100 million.
Yes, because the turnover is above 100 million.
Sir, sorry, which companies, because in the former one we didn't calculate NITDA for the first question we solved, first example. So which one, when does it qualify?
I've said when your turnover is more than 100 million, if you are a telecommunication company, internet service provider, bank, insurance company, you will need to pay NITDA. We should be happy by next year now. Ladies and gentlemen, by next year, no more NITDA, no more tertiary education tax, no more police development levy. Everything has been lumped up with a new tax called what? Development levy of 4%. Do we understand? Everything has been lumped up for development levy of 4%. That means, according to the new Tax Act, Nigeria Tax Act, there will be no more NITDA next year, no more tertiary education tax, no more police development levy as from next year. Do we understand?
Yes, sir.
So that is how we get this. Any question regarding this? Do we have any question again? So in the absence of no question again, the next taxation of specialized business we need to move to is taxation of bank. I will just introduce the bank briefly. We close. We can't solve question on bank today. We cannot do more than just introduction of bank briefly. Taxation of bank is the next specialized business we are looking at. So I will just introduce it briefly so that we can go and rest. For bank, they pay company income tax, they pay education tax, they pay NITDA, and bank, they are specialized too, because there are some of their income are subjected to tax, while some of their income too are exempted from tax. Apart from that, banks are liable to the tax authority by providing their customer information to the tax authority. Even it is stated clearly in this Nigeria Tax Act that any any corporate, any individual account that transaction is more than 25 million, banks should report it to the relevant tax authority. And they state the one of companies too, the corporate organization. Maybe it's the one of corporate organization. Maybe if you do a transaction that is more than 25 million, banks should report the transaction to the Federal Inland Revenue Service. But for individual, I think if you do a transaction that is more than 5 million, so bank, apart from paying tax liability, they are also liable by providing the information about their customer to the tax authority regarding their income. So aside that, we need to know that if a bank want to open a corporate bank account to a company, they will request that the company should go and get tax identification number. Without having a tax identification number as a company, you cannot open a corporate bank account in a company, in a bank. So it is mandatory for every bank to request for TIN from their customer. Now, we can start with what are those income of a bank that are subjected to tax? What are those income of a bank that are subjected to tax? IFRS 15 state out clearly those income, revenue and other income of a bank. What are those income? Account and transaction fee is subjected to tax. Management fee, underwriting fee, advisory fee, account and administrative fee, annual account maintenance fee, insurance commission, interest income. All this income I mentioned, they are subjected to tax if a bank earn any one of such income. So we have looked at those income of a bank that are subjected to tax. We can also look at income of a bank that are exempted from bank. What are the income? If a bank earn them, they will not pay tax on them. That means non-taxable income of a bank, income that is not subjected to tax. What are the non-taxable income of a bank? I will start from the last one, going back to the first one. First non-taxable income of a bank is profit on disposal of fixed assets. If a bank dispose fixed assets and they make a profit, is it going to be taxable or non-taxable? It is non-taxable. It's not going to be subjected to company income tax. Likewise, too, dividend receive or dividend income. If a bank receive dividend from their investment shares in another company, that dividend income, dividend is treated as a frank investment income. I've explained in our previous class that frank investment income, they are those income that they are subjected to tax at source, and such kind of tax is a final tax. That means when the receiver of the income receive it, they cannot pay any other tax again on such income. So these are the reason why we treated dividend as a non-taxable income. So dividend is one of the non-taxable income too. Even generally for any other companies too, dividend is treated as non-taxable income aside from bank. Let's leave bank alone. Dividend is any other companies too. They treated dividend. If they receive dividend, it will be treated as a frank investment income. It's not subjected to tax again. It has been taxed as source. Likewise, to profit on disposal of fixed asset too, it is not taxable because that one has been subjected to capital gain tax, which is another type of tax on its own. So we are looking at income earned by bank that are exempted from tax. That means non-taxable income of a bank. We have looked at profit on disposal of fixed assets, dividend received. Another one we need to look at, interest earned on foreign placements. Interest earned on foreign placement. If a bank has a foreign investment, they now earn interest on such investment. If the investment is brought to Nigeria through approved channel, that means if government is aware when the income is brought to Nigeria, that means such income will be exempted from tax. However, the new Nigeria Tax Act that was signed into law specifically mentioned one of the area that act really dealt with is about foreign investment. Now, as for next year, if a bank receive interest on foreign investment, either you bought it to Nigeria through approved channel or through illegal channel, you will pay tax. What I'm saying in essence is The new Nigeria Tax Act has now made it mandatory for any foreign investment income or interest to be subjected to tax. That means as for next year, January. Another one, interest received by bank on federal or state government stock bond. We can call it interest received by bank on federal or state government security. If a bank subscribes for security issued out by government, like treasury bill, treasury certificate, development stock, bond, interest on such investment is not subjected to tax. It will be exempted from tax. Another one, interest on a loan granted by bank to a company engaged in cottage industry. Interest on a loan granted by bank to a company engaged in cottage industry. Interest on a loan granted by bank to a company engaged in what? Cottage industry. Under Family Economic Advancement Program, this shall be exempted from tax if the moratorium period is not more than 12 months, it's not less than 12 months, and the interest rate is not more than the base lending rate at the time the loan was granted. Another income of a bank that is not subjected to tax, let me repeat it again, interest on a loan granted by bank to a company engaged in cottage industry under Family Economic Advancement Program. This has condition. One of the conditions that will not make tax authority to tax this interest is the moratorium period. That means the grace period given by bank to the borrower before the borrower will start paying should not be less than 12 months. Secondly, the interest rate that the bank charge on such loan should not be more than the base lending rate. CBN, they are the one that fix base lending rate. So it should not be more than the base lending rate. If it pass those two conditions, that means the loan, the interest will be exempted from tax. Another one, interest on a loan granted by bank to a company engaged in fabrication of local plant and machinery. Interest on a loan granted by bank to a company engaged in fabrication of local plant and machinery. This one shall be exempted from tax if the moratorium period is not less than 18 months and the interest rate is no more than base lending rates. We have another one. Interest on a loan granted by bank to a company engaged in primary agricultural production. Interest on a loan granted by bank to a company engaged in primary agricultural production. This shall be exempted from tax if the moratorium period is not less than 12 months and the interest rate is not more than the base lending rate at the time the loan was granted. The last one we have is interest on a loan granted by bank to a company engaged in manufacturing goods for export. That means to a company engaged in exportation. Those companies, they normally manufacture goods in Nigeria. After they manufacture it, they export it out of Nigeria. If a bank gives them a loan, that loan, the interest on the loan shall be exempted from tax. That means bank will not pay tax on the interest on the loan, provided that the following condition occur. What are the conditions that will not make bank to pay tax on the interest on the loan given to manufacturing goods for export? Number one, the beneficiary company must export at least 50% of the good manufactured. That means the good that they are producing in Nigeria, at least 50% of the good must be exported out of Nigeria. Another one, certificate of export must be obtained from where? That company that engage in exportation, they must obtain certificate of export from Nigeria Export Promotion Council. Why the last condition is the rate of exemption on those interests shall depend on the following. Assuming the repayment period of the loan is more than 7 years and the grace period is not less than 2 years, that means 70% of the interest of the loan will be exempted from tax. If the repayment period is between 5 to 7 years and the grace period is not less than half of a year, which is 18 months, that means 40% of the interest of the loan will be exempted from tax. But if the repayment period is between 2 to 4 years and the moratorium period is not less than 12 months, that means 10% of the loan, 10% on the interest of the loan will be exempted from tax. But any loan that the repayment period is below 2 years, no, in that case, all the interest will be subjected to tax. There will be no exemption. These are those interests of a bank or income of a bank that are exempted from bank. These are those income of a bank or interest of a bank that are exempted from bank. Now, let's look at special disallowable of expenses of a bank. What are those expenses? If you see it, these expenses, they are peculiar to bank only. But if you see it in the account of a bank as an expenses, you are going to disallow them. These expenses are only peculiar to bank. But if you see it in the expenses of the bank, you will disallow them. Number one, increase in provision of performing loan account. Increase in provision on performing loan account. You disallow them. Increase in provision of other asset and account receivable. You disallow them if you see them in the expenses of a bank. Provision for advance under finance lease too. If you see them in the expenses of a bank, you disallow them. Provision for gratuity too, you disallow them. Unrealized exchange loss too, you disallow them. Provision for off-balance sheet engagement too, you disallow them. If you see them as an expenses of a bank, they are peculiar to bank only. You can't see them in any other company expenses. You only see them in the expenses of a bank. But why seeing them, you must disallow them as a disallowable expenses. So this is what we need to know on bank. This is what we need to know on bank. So this is all what we have on bank. So concerning this bank, let's look at one simple question, 2-minute question for us to look at what we have been saying in the past. So just look at this question. It's a 2-minute question so that we can go. This is the question we want to look at now. Question 3 is a question on bank. But within 2 minutes, 3 minutes, we are done. Somebody should help us read this question. This is the last for today.
Interest on loan relating to primary agricultural production included. It's only reading.
Okay, go ahead.
Okay, the interest on loan relating to primary agricultural production included in the income of ABC Bank Limited for the year ended 31st December 2021 amounted to 5 million. The breakdown of the interest income based on loan terms as follows.
That 5 million naira, the breakdown is given to us. Oh yeah.
Base lending rate in respect of the facility is 21% per annum. Required, compute loan interest exempted from tax.
This interest is given by ABC Bank. To which company is ABC Bank give the loan to? To primary what?
Agricultural production.
If a bank give a loan to primary agricultural production, it's going to be exempted from tax, provided that it pass two conditions. What are the two conditions? Like I said earlier, the moratorium period must not less than 12 months. And the interest rate must not more than the base lending rate. Now, let's go and look at the loan one by one in our solution. The first loan given by ABC Bank Limited to Agri Business is the loan that have 5 years, but its own moratorium period is 24 months, while the interest rate is 15%. Is it going to be exempted from tax or subjected to tax? Is it going to be, this first one, is it going to be exempted from tax or subjected to tax? It's going to be exempted. Why? It passed the two conditions. Number one condition is, look at its own moratorium period, 24 months. That means it's not less than 12 months. Its interest rate is 15%. In this question, what is the base lending rate?
At 21% per annum, sir.
That means it's not more than the base lending rate. In that case, these 2.5%, these 2.5 million will be exempted from tax because it passed the two conditions. It must pass the two conditions. It should not pass one and fail one. No. The second one, so if you look at my solution, you can see I, under interest exempted from tax, I write the 2.5 million. The second one, for the second one, the moratorium period is 6 months. The interest rate is 20%. Is it going to be exempted from tax or subjected to tax?
Exempted. I mean, it's subjected to tax
Why?
because it's less than 12 months moratorium.
Because it failed the condition of the moratorium. It's less than 12 months. So it will be subjected to tax. So under interest exempted from tax, which they ask us to compute, you can see in front of the 800,000, I put 0. That means it's going to be subjected. Assuming it's going to be exempted, I will write the amount where I put this 0. Do you understand? So the third one, can we look at the third one? What is the third one? The third one has 18 months, 14% interest. Is it going to be exempted or subjected?
It's going to be Exempted
Why?
because it is more than 12 months and the monitor is more than 12 months and the interest rate is less than the base lending rate.
Yes, it's going to be exempted. Why the last one? The last one, is it going to be exempted or subjected?
It's going to be subjected, sir.
Exempted.
Why?
It's going to be exempted.
Why
It will
is
be
it going to be
subjected.
exempted? Somebody that
Subjected.
will no, let the person say, the person that says it's going to be exempted, he may have one reason. Let him say it. Oh yeah, why?
It's going to be exempted because the is less than 12 months, but it's 35% interest rate.
Okay, let me correct you. Anything less than 12 months is going to be exempted, yes. But the interest, the reason why we cannot exempt it, what is the reason? Because of what?
Because the interest rate is above the baseline. The base
Yes.
rate, sorry.
If the interest rate is more than the base lending rate, it will be subjected. They say the interest rate must not more than the base lending rate. Look at the base lending rate, 21%. But this one is more. So by this one is going to be subjected, not exempted, my sister. Though out of the two conditions, he passed how many conditions out of two?
One.
He did not pass the second one.
So I thought he must pass the two conditions.
Yes. If he didn't pass the two conditions, it's going to be failed. So this one is going to be subjected to tax. So, it's not going to be exempted. Since he did not pass the two conditions, he must pass the two conditions. Do you understand?
Yes, sir.
So if you look at my solution now, first one is exempted, I write the amount. Second one is not exempted, I did not write the amount. Third one is exempted, I write the amount. Why the fourth one is not exempted? That means out of total interest on loan of 5 million, how much will be exempted from tax out of 5 million?
3.2.
3.2. That is what we need to do. So, ladies and gentlemen, we have tried enough. This is almost 10:30. So, thank you for having me. So, by next week, we still continue on bank. We have a lot of questions, 3 more questions to solve on bank. We'll start solving it by next week. Do we have any question regarding this? Or regarding what we have taught so far? Even in our previous lecture, the topic we have discussed so far, if you have any question, let me know. I saw a question relating to capital gain tax. Somebody sent that question. I'm sorry for not responding. He sent it to the group chat. I was very busy. My weekend, I always I did online lecture. Apart from that, we have 2 center. On Saturday, I will be in our Isolo center. On Sunday, I will be in VI, coupled with a lot of work. So I have a lot of file on my table and so on like that. So I just remember now. I'm sorry for not responding, but I will respond to the question. It's asking a question relating to higher purchase interest. So please, I will respond to it in due course. So do we have any question, any observation so far?